I have a quick question for you guys before this video starts. What are you guys currently doing in this market crash situation? Are you buying or are you selling? I'm personally buying more. I've actually been waiting for this type of situation to occur for a very long time. I have tons of money put on the sidelines ready to go for, like I said, this type of situation. I genuinely want to know what everybody else is doing right now, so leave it down in the comments below. Without further ado, let's get into today's video. What's going on, you guys, and welcome back to today's video. It's been a while since we last talked, and a lot of things have happened since then. We got the coronavirus, we got the oil price war with Saudi Arabia and Russia, and we got the long-awaited market crash. Remember a couple videos back that I told you guys that I wanted you to be prepared? Yeah, this is what I was talking about. We're actually seeing the results of so much fear and uncertainty in the markets. Just 2 weeks ago, the stock market lost $3.8 trillion. That's insane. And it feels like the stock market just keeps going lower and lower every single day. And for lots of people, seeing their accounts go down in value every single day is a very real fear, so they sell. It's fairly easy to make money whilst everything is going up in the market. I mean, we've been going up for the past 10 years or so, and now that people are finally seeing a downturn, everybody's freaking out. Everybody is showing their true colors when things go south, when things go bad, when things like this market correction happen. The prepared are gonna thrive in this environment, and the unprepared are gonna go down. Like I mentioned earlier, I told you guys a couple videos back, money is made when things go up, but tons and tons of wealth is made when things go down. One of my favorite quotes from one of my favorite investors ever summarizes this exact situation. Warren Buffett once said, "It's only when the tide goes down that you realize who's been swimming naked." I'm not really here to preach. I'm here to show you guys what you can do in this type of situation. So let's get into it. The very first thing that's gonna set you apart from everybody, from 99% of people, is not selling. Remember, you guys, write this down, memorize it, put it on your phone, do what you have to do. But remember this rule, don't sell. What typically happens is that people will buy here when the market is going up, and then people are gonna sell here when things are going down. Any losses or gains in the stock market aren't real. You make them real by locking in those trades and pulling that money out. Remember this, you guys, the stock market has historically always gone back up after a crash. If you're a teenager like myself, or you're in your 20s, 30s, or even 40s, and you know you're not gonna be needing this money now, then why sell? This actually leads me to rule number 2. Keep your emotions and your investments separate. What I actually mean by this is, don't let your emotions dictate your investment decisions. For example, when Bitcoin and cryptocurrency and the future 2040 whatever was a trendy topic, everybody wanted to buy in. You saw high school teenagers becoming cryptocurrency experts overnight, and it was the next big thing. And many investors noticed the prices of these cryptocurrencies going up, so naturally they didn't want to miss out. So what did they do? They bought at a high price. And what happened next? They sold at a low price. Kind of like how I just told you guys. People bought here when everything was going up, and then people sold here when things were going down. This is called FOMO, or fear of missing out. An emotion-driven investment decision. Another example is actually right now. When everybody else is selling, you're more likely to sell as well due to fear. Something I actually really like to do is look at these type of situations in the eyes of Warren Buffett. If Warren Buffett didn't sell during the Cold War, the Vietnam War, 9/11, then why would he sell now? The dude has gone through some major events and never sold. This just goes to show you guys, if you wait it out, you're more than likely gonna be just fine. Now, when the prices are low, you gotta make sure you're buying into good companies. So rule number 3 is always do your research when you're looking into a company. Research is crucial when putting your money into companies. Always know what you're getting yourself into. Just because I got my money in a certain type of investment, or Graham Stephan does as well, doesn't mean it's gonna work for you. Everybody's investment situation is completely different. Something not so risky to me could be suicide for you. Not only just that, doing your research pays handsomely when we're in situations like the one we're in right now. When you've done your research on a certain type of company and you know it's solid, stable, and profitable, you don't fear a downturn. If anything, you embrace it, because now it gives you a chance to buy even more at a discount. Just to put things into perspective for you guys, I actually opened up into 9 different new companies whilst everybody was selling and running away. So rule number 4 in today's video is trying to time the markets. The stock market is like a bipolar person. Sometimes they're negative and sometimes they're positive. The market could go up tomorrow 6%. Or it could go down tomorrow another 10%. Nobody really knows. You never really know what you're gonna get. You have an idea, but at that point you're probably just speculating. Instead of waiting for the market to hit rock bottom lows, just keep buying. You see, tons of people usually want to wait till everything hits rock bottoms, and then as a result of that, they never buy. because nobody really knows when the stock market is going to hit the very bottom. This is called trying to time the market. This is like being 5'4" and trying to beat LeBron James in a dunking contest. You can try, but it's probably not going to happen. Buy when markets are low and keep buying as it goes lower. And keep buying when markets are up as well. This way you buy in at the market's worst and average in at the market's best as well. This is an investment term called dollar cost averaging. And last but not least is have cash reserves. It's one thing to be waiting for a market crash, and it's another to not even have money to buy into the companies you want to get into. Have a portion of money put on the sidelines for this type of situation. Like I mentioned earlier, what's the point of having investments on sale when you don't even have the cash to buy them? It's the equivalent of being on the bench and watching everybody else on the field ball out. I always take at least 10% of whatever I make to put on the sidelines for situations like this one. Sometimes I even put away more, it really just depends. No matter what though, I always make sure I put in at least 10%. And that's the end for today's video, you guys. I hope you enjoyed it. And as always, like, comment, and subscribe. I'll see you guys on the next one.